Okay, welcome everyone. This is a special Friday night edition of the Anderson Report. It was a banner week on Wall Street by anyone's measure. And bear with me just a second. There's one trading day left in the month of October. I'm sorry, the month of August. And coming into the month, we thought it would be nearly impossible to duplicate the performance that we had both in the end of the second quarter and also in July. But we actually beat some of the metrics that we put up in July, and we're going to go over those in just a couple of minutes. Thank you guys for joining the program. SG, it's good to have you in here. John, um, yes, taking us into the weekend, and the chat is working. Happy Friday, Mark. So, um, this is my YouTube channel. If you are new to the show, please subscribe to the channel on YouTube, The Anderson Report. Hit the little bell next to the red subscribe bar, and you'll get notifications of when the next show will be aired. And if you prefer to watch on Periscope, it's TJ Anderson 12. My Twitter handle is TJ Anderson 1. We are going into the last weekend before Labor Day weekend, maybe the last weekend of the summer, if you consider the summer to be over at the end of August. Labor Day is quite late this year. It's not till September 7th. And, but that being said, it's been on the East Coast, it's been just an all-star weather for most of the summer. And maybe that's been good with a lot of people locked, trying to work from home or whatever. So we are going to go over a few economic data points where we are on the month. Basically, there's 1 month to go. These numbers will adjust a little bit after Monday, but they're not going to adjust a lot because they're pretty. We have pretty strong gains among most of the major averages, really among all of the major averages, with the Dow Jones actually this week rallying to the point where it is now in positive territory on a year to date basis. We call that being in the green. So, um, today's action, I was a little nervous about the market coming into today just because we had this news last night, very late in the evening, maybe around 1 o'clock, that the Prime Minister of Japan, Abe, was going to be resigning shortly for health reasons. I guess he has had some serious intestinal health issues in the past. I'm not totally up on it. He's been great for Japan. He's been as good as he could be for the Japanese economy, trying to plant some early green shoots for them to come out of what's been uh, almost a lost 3 decades. 24,000 would be a key level for the Nikkei 225 on the way up. It got there in 2018, early in the year. It got there in early this year. Then, of course, with the coronavirus, traded down quite a bit. It was at about 20,000, 23,000, maybe 23,300 earlier in the week. Their market was down sharply on the news that he is resigning. Um, I think it was down like 1.5%, but that's about 360 points, down below 23,000 to 23,800. I thought it might have a negative effect on some other global markets. It really didn't. The U.S. markets were strong. right out of the chute. I think still a a follow-on rally from the statements that Powell made in his Jackson Hole speech, although he wasn't in Jackson Hole when he made the speech, it was a virtual conference. Um, Basically, has maybe helped the market come out of this looking a little frothy stage that it's been in. You could probably tell that I've been a little bit concerned about it. And that um, we have had uh, a little bit better market internals yesterday and even better today. That's a positive sign. The caveat is that September sometimes can be a queasy month for the market um, because we have had a history of sharp sell-offs, of 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 market weakness in September that on occasion has drifted into sharp sell-offs sometimes during October. The most infamous, of course, being the stock market crash, if you want to call it that, in 1987 when the Dow Jones Industrial Average went down 17%. I'm going to say 17%. It might have been 22% on October 19th, 1987. But John, I'll get into that a little bit in a minute. I'm not an expert on the Japanese economy, but I know that as bad as a state as it's been in for the last 20 years, he's done fairly decent. I think there are a couple of people in line that I read some comments might be also a positive follow on from him. But I'd like to just, before I really get into it in depth, I'd like to do a little work on it over the weekend. Okay, so the Dow was up 160 points today. That's 0.6%. It closed at 26,650. That leaves it less, just about 900 points from its prior all-time high of 29,550. The Dow is now in the green year to date. It's up 0.4%. That's not that much, but given the fact it wasn't that long ago that the Dow is still down 8 to 10% on the year. In fact, it started the quarter down about 10% year to date. Specifically, the Dow is up this month. It's having a great month. It's up 8.4%. We, of course, are 2/3 of the way through the third quarter. The Dow is up 11% quarter to date. The S&P 500 closed above 3,500. I believe that 3,500 is maybe the target for the end of the year from some widely followed strategists around the street. It'll be interesting to see if they raise their targets or not. I think that early in the month, Goldman Sachs raised its target for the end of this year to 3,600. The S&P 500 has made a new high. Oh boy, I'm going to get this wrong. Either 6 or 7 days in a row. That's a very long streak. The S&P was up 23 points today, 0.7%. The S&P 500 is up over 7% month to date. It's up 13% quarter to date. That's over the last 2 months. The S&P 500 is up 8.5% year to date. I think that even in a normal year, most investors would take that in a heartbeat. So the NASDAQ composite had a nice day today. uh, up 70 points. It closed at 11,695, up 0.6%. The NASDAQ is up a little bit higher than the Dow and the S&P. It's up 8.8% month to date, but that's on top of almost the same increase in July. Quarter to date, the NASDAQ is up 16.3% quarter to date. It's up 30% year to date. I made a big point at the beginning of the month or even in July saying that, talking about the NASDAQ being, when the NASDAQ was up 17 or 18% for the first half of the year, that it's not going to be able to duplicate that performance in the second half of the year. It's trying very hard to prove me wrong. The NASDAQ is up 30.3% year to date. It's amazing. Now, even the Dow Jones Transportation Average, which obviously was hit very hard by both the rails and the airline stocks. The airline stocks more severely. The rails, when commerce shut down everywhere at the beginning of the coronavirus. I don't have in front of me what the lows were in March for the transport average. It had a nice day today. It was up 1%. The airlines had a nice day today, even though the TSA numbers, and I didn't actually write them down, were not really good this week. They were down, I would say, every day this week. The TSA checkpoint volumes were 3 to 4% lower than they were for the same day of the week a week ago. But the airlines had a good day. The transports had a good day. They were up 1%. They gained over 116 points. The Dow Jones Transportation Average is up 13.3% month to date with 1 day left in the month. It's up 23% quarter to date. And just to give you an idea of how sharp the plunge was for the transports, the last few days of February and March, the transports are up 23.2% over the last 2 months. That's a quarter to date gain for the transport average. They're up 3.9% for the year. I think at the one time they were down 30% near the lows in March. Now, the one average that is behind all of the others is the Russell 2000. That's the small cap average. I think it's trailed a little bit over the last week and a half due to no stimulus 4.0 plan and due to the fact that that might slow the economy down. The companies in the Russell 2000, a lot of them are companies that just can't easily go to the capital markets or might not have big bank lines available to draw on, like a lot of the higher cap companies in the S&P 500, in the NASDAQ composite, even in the NASDAQ composite. Clearly in the NASDAQ composite, there's some overlap with the lower tier of those 3,000 stocks and maybe the upper tier of some of the 2,000 stocks in the Russell 2000. There's 3,000 stocks in the Russell universe and the Russell 2000. The reason it's called the small cap benchmark is because it includes stocks on a market capitalization basis from 1,001 to 3,000. So it takes away the 1,000 top market cap stocks in the Russell. The Russell actually had a nice day today. It was up 0.9%. I think that the Fed action, as laid out, wasn't really action, but it was they're tweaking their policy a little bit on how hot they would let inflation run before they think about raising rates. The Russell gained 1%, just under 1%, gained about 14 points, 1578. It's 22 points away from 1600. That's where it ran into very stiff resistance early in the month. We got to watch that level very closely, the 1600 level on the Russell 2000. If it continues to rally like it did today. Now, I have talked numerous times over the last, let's say, week about how being concerned over the fact that there's some negative divergence between big market averages making new highs and the advanced decline line, or what we call the breadth of the market. We had better data on that today, and it is definitely a little encouraging. Now, we had days, notably last Friday, notably a couple days early in the week, when the NASDAQ had much stronger gains than it had today. It gained 0.6% today. The days when the S&P has gained 1% or more, it gained 0.7% today. And the advanced decline stats have been negative. That's usually not a good thing, although I have tried to mention that sometimes that can just be worked out over time. That can be, if the averages continue to advance, sometimes the market breadth will catch up. The negative market breadth is emblematic of the fact that the Russell 2000 has trailed the bigger averages over the last, let's say, 2 to 3 weeks. So it probably makes sense that the Russell was up more, had a better gain today on a percentage basis than the S&P, the Dow, or the NASDAQ. And the advanced declines at the NYSE, which is a universe of just a little over 3,000 stocks, were better than 2 to 1. There were 2,000 stocks advancing, 900 stocks declining. So that's a very positive, advanced decline number. Even on NASDAQ, which gained, there were days, one day earlier this week when NASDAQ gained 1.7%. And and that's a very strong gain for one day, but the advanced declines on NASDAQ were negative. Today, on the NASDAQ exchange, a universe of about 3,400 stocks, the advanced declines were positive by 2 to 1. So this is, look, we'll watch this a little bit on Monday. We'll watch it as we get into the first few days of September. But clearly, it's we'd like to see the advanced decline continue to improve a little bit, particularly in light of the fact that it gave us some bothersome negative divergence vis-a-vis the big averages for a while. Yeah, Jen is saying maybe school started, maybe less travel. Yes, and obviously we could go back and look at the travel numbers. I did look a little bit at the travel numbers for the same week of August a year ago, and where the travel numbers for this last week were on the TSA checkpoints were for Tuesday and Wednesday, which are the lowest volume days of the week, they were in the mid 500,000 range. Yesterday they were maybe 720,000. We could the only caveat in comparing them to what they were a year ago in the same week is that the low point is going to be a 2 million number for the week, and the high point is going to be like a 2.5, 2.6 million number for the week. So Jen, I think you've got a good point. I was thinking about that a little bit myself. And we'll just You know what? It'll be interesting to see. We get into September, if we can get a little bit more. Uh, I mean, clearly, virus positive virus tests are down. You hear a lot less about explosions in certain high population areas of the Southeast, the South, Texas, and Arizona and California. Sure, we'll still have some positive cases. Clearly, with schools reopening, we don't want to see big outbreaks of positive cases in schools or school communities. But I think it's important for them to reopen, and then we'll see if people get a little bit more confidence about being in indoor activities or anything involving, travel on airplanes, et cetera, et cetera. Do I think stock bounce because of the convention? It could be. Clearly, I mean, I think that Trump had a very good convention. Even his job approval numbers went from 47 to 51 the week of the Democratic convention. And that was a 51 on a week ago Thursday. They held 51 on Friday. And those are job approval numbers, not who will you vote for. It's a slightly different question. But I also saw that over the weekend, or maybe on Monday, they were 52 on Zogby. Of course, the Rasmussen, I think the Rasmussen job approval numbers are extremely legitimate. I think their methodology is very solid. Uh, the left is always going to push back with the false narrative. Yeah, but Rasmussen's a Republican or a right leaning polling operation or a Republican leaning polling operation. They're really not. It's just that they poll likely voters, where a lot of the public polls that you'll see from media outlets poll um, registered voters or um, voting age adults, which is even a worse methodology to use. So to see the Zogby job approval numbers at 52, I thought was very noteworthy because Zogby is always thought to be somewhat of a slightly more democratic the works for Democrats a lot more than Republicans on some of his private polling businesses. That doesn't mean he leans that way. That doesn't mean he's going to skew his poll that way. But the Trump team can always push back and say, don't complain about the Rasmussen poll. Zogby just gave us a 52% approval rating. So, um, yeah, the shrinking poll numbers for Biden. Look, there's no doubt that the market will continue to do better if, and particularly the energy sector and the financials, if it gets significant signs that there's a declining probability that Biden would win the election in November. Frankly, I think a lot of real serious market professionals believe that Trump is going to win in November and are positioning themselves for that likelihood. You've heard Jeff Gundlach say that, and I don't believe he's a Republican. You've heard Bob Dole, who was at BlackRock for a long period of time and now is at Naveen, talk about how the high hurdle that any challenger has against an incumbent president running for reelection. So I think the real seasoned pros in the market believe that Trump is likely to win the election. And I think that a lot of the uh, data, whether it's polling, whether it's Biden approval numbers, or whether it's the bookie odds in London, have moved in that direction over the last 2 weeks. And probably, I mean, we'll see if they continue to do so. Trump was out on the campaign trail tonight, right after his hour plus speech Last night he was in New Hampshire. He spoke at an airline hangar for it was a Trump style rally. There's no doubt about it. But there weren't 20,000 people in a sporting arena. There were, I don't know what the numbers were, 2 to 3,000 people maybe at an outdoor uh, airplane hangar type facility somewhere in New Hampshire. I honestly don't even know what city it was in. I watched a good chunk of it, and he was not holding back. And I would expect him to put his foot on the accelerator pedal down to the floorboard and leave it there until November 3rd. Um, Look, crude oil held 43 today. And since we mentioned crude oil, let's talk about one other interesting item. And I've talked numerous times over the last week about the negative divergence between the energy sector of the S&P 500 and performance of that sector not really moving with crude oil at all. Now, crude oil was unched today, but it's at the higher end of the range. It's a little bit above 43. The energy sector was the best performing sector of the S&P 500, up 1.8%. Jen, I would not doubt that the people who've been selling energy relentlessly for weeks have maybe said, you know what? Maybe Trump is going to win this thing. Maybe these energy companies aren't going to be put out of business by some perverted Green New Deal, ban on fossil fuels, et cetera, et cetera, et cetera. Let's stop selling these things. They're like almost kind of cheap here. The energy sector up 1.8% today. It's one day. It could be an oversold bounce. There could have been some short covering. Let's watch the energy sector closely next week. I don't think it was a big reaction to the storm in the Gulf, other than apparently from some oil analysts that I listened to and read today, the uh, the oil sorry about that. The oil sector may have had a bounce today because, from what I understand, there was much less flooding in the refining fields in East Texas and Southeast Texas because of the direction that the storm took and the intensity on the other side of the spin. Um, and that maybe some people were uh, anticipating that under a worst case, the energy sector may have um, been under pressure if the refiners were going to be shut down for a while. So I think they dodged a little bit of a bullet there. And the energy sector was up 1.8%. The material sector was up 1.1%. I have read that the raw Australia is a very raw material rich nation. Everything from iron ore to copper to ferrous metals to really much more so industrial raw materials than precious metals. Um, we've talked about the material sector. It'll have a good week and then it'll consolidate, pause a little bit. It had a nice day today, up 1.1%. Tech stocks also had a decent day. Infotech up 1%. Consumer staples up 0.9%. That's a sector that's been lagging. And industrials up 0.9%. A decent move in the industrial space. I think that the Fed comments also on Wednesday in Powell's Jackson Hole speech, although he wasn't at Jackson Hole, were very positive for the industrial part of the economy because it's going to people are not going to be concerned that if inflation starts to work its way higher, that the Fed may uh, think about raising rates and take away the punch bowl, so to speak. Powell was very clear. He said that, from the study that they've been doing, and this is a study that's been going on for 2 years. This is not just specifically in reaction to the big sell off from the coronavirus economic shutdown. This is a study that's been going on for well over 2 years. They no longer see a direct or an inverse relationship between inflation and job creation. They feel that they can let inflation run well above its, and when I say well above, I don't mean up to 5%, but they can let inflation run above their 2% unofficial target without worrying that the economy is going to overheat or that the labor market's going to get so tight that they have to start raising rates right away. So, look, the market had a great month. It's having a great quarter. There can be hiccups in the market in September. But we'll see. We're going to be on the lookout for it. We're not going to predict it, but we're going to be on the lookout for signs that it might happen. Now, the bond market also yields a little bit higher. They got up to 0.75, just a touch below there. They got up there on Wednesday at the end of the day, I think, after Powell's comments. The 30-year up to 1.5. I think something else that's significant about what the Fed said on Wednesday, and I probably mentioned it yesterday, but I don't think people should get trapped in to the thinking that, look, the Fed has just said that they're going to leave rates very, very low for a long time. That does not mean that government rates have to stay very, very low for a long time. And what that means is because if the business community feels, look, the Fed's going to let this go, and they're going to welcome some inflation. They've been not hoping for it, but they've been working for it, doing everything they can to get to 2%. We're nowhere near 2% inflation. If we get to 2% inflation, the Fed is not going to tap on the brakes right away. They're going to let it get to 2.1, 2.2, 2.3, and then be convinced that it's not a blip, or as the Fed would say in one of their favorite phrases or pieces of terminology, transitory, meaning that it's just there. They're not going to they're not going to tap the brakes by raising interest rates a little bit until they are convinced that inflation is going to stay above 2%. And that could take 2 or 3 quarters. So what does that mean? That means that rates could go a little higher. That would give some support for the dollar. The dollar hit a 2-year low maybe 2.5 weeks ago, probably coincident with gold trading above 2050, 2060. Although it's interesting that gold was up $30 today. Gold closed at 1970. Silver was up a little bit. A lot of people have been talking about, well, gold is rallying because the dollar's so weak. I would imagine that the dollar had a little bit of strength to it today. Maybe not against the yen because of the Abe resignation, but but with rates going up, that's going to support the dollar. Now, why would rates go up? Because businesses can be confident that they can expand and put expansion plans in place that might be good for 2 to 3 years or 3 to 5 years without being concerned that at the first sign of inflation at 2%, the Fed's going to slam on the brakes. And then we're going to wish we hadn't expanded. Now, The financials, they maybe weren't one of the top performing sectors today, but they were yesterday. If rates continue to stay where they are, and the 10 years at 0.75%, the highest rate it was at since early June when it spiked up to 0.9%. That didn't last more than a few days. It went right back down to 0.65%. If these rates can stay above 0.7%, maybe get to 0.8% and stay there for a few months, the that will be good for the banks because they know that rates are going to stay near zero, the benchmark Fed funds rate, for a very low period of time. And if the yield curve steepens, that will be good for banks. It would steepen if we see increase in economic activity. The other thing that we need to plug into that equation is some definitive and concrete positive news on therapeutics and or a vaccine for the virus. So industrials, materials acted well. Copper above $3, 301. Housing sector, smoking. We've seen the data now consistent for 3 weeks. Lumber prices up. Somebody was in the chat yesterday that mentioned it. Lumber prices are very strong. And that's kind of the story. I mean, I think had one piece of housing data today. It was very positive. We're going to have a fair amount of economic data coming at us next week, and that would be highlighted by Monday's pretty much a void day for the data, but on Tuesday we will get the ISM manufacturing index. The estimates are for it to come in at about 55. It was 54.2 in July. This is an August number. We actually had the Chicago PMI number today. That had cratered very, very low, I believe, below 40 at the depths in March. It came in at around 51.5, 52, maybe down just a touch from the prior month, but holding above 50 for the purchasing managers indexes and the manufacturing index and the service sector index, which some people will call the non-manufacturing index, which will come out next Thursday, either next Wednesday or Thursday. That 50 level is the threshold between economic expansion and contraction. So we get an ISM manufacturing number coming in next Tuesday at consensus of 55 or better. The market should like that. We'll get a construction number on Wednesday. It's got to be a good number. Certainly in residential. Whether it's the same in commercial, we'll just have to see. Now on Wednesday, we'll get the ADP employment report because it is the first week of the month, and it's 2 days before. Wednesday will be 2 days before the August jobs report. ADP employment report, it was a disappointing number last month. It came in at plus 167,000. Next Wednesday, we're looking for the ADP employment report for Wednesday to be plus 1 million to plus 1.2 million. It will get a lot of attention. So then Thursday, we'll get the weekly claims number. We'll get a revision to second quarter productivity. We'll get the ISM non-manufacturing or the service sector number. And then Friday, of course, the big kahuna, the August jobs report, looking for non-farm payroll gains of 1.2 million to 1.4 million. I don't know about that. That would be down from last month. Last month was a pleasant surprise where I think people were looking for unch, and we got a plus 1.8. We're looking for plus 1.2 million to plus 1.4 million. I think we've had some job gains from some businesses opening back up, no doubt about it. But we've also had companies, notifications from companies about layoffs they're going to be making. That doesn't mean that they probably made them yet, but there's clearly companies that are thriving during the virus, mainly anything supporting digital commerce. And then there's some that are just going to have a tough road to get back anywhere near where they were. So, next Tuesday, September 1st, the big thing in September is, do we get a little bit of a September swoon in the market? We've had outsized gains quarter to date. There's just no way around it. The Dow up 11%, the S&P up 13.2%, the NASDAQ up 16% quarter to date. Month to date gains of 7 to 8.5%. The transport's up 13%, the Russell up 6%. I said this a month ago and I was wrong. You can't have gains like that every month. I mean, we're positive now year to date for the Dow. We've had our V-shaped recovery in the stock market on the major market averages. The Russell has a little bit more work to do. Okay. Some stock sectors have more work to do. The airlines have more work to do. Obviously, the cruise lines are just in a terrible situation for obvious reasons. Hotels, big hotels and restaurants, you don't really see that in terms of public companies. We got to get the economic data for the whole economy to improve at the rate that we've been told it's going to improve, 20% for the third quarter. We got to see more businesses open back up. Airlines announced layoffs. Yes, they did. And I think that there's just no way around it for them. They employ hundreds and hundreds of thousands of people. And if international travel is not going to get back anywhere near where it was for at least another 12 to 18 months, there's just no way around it. You're gonna have some job cutbacks in that space. So it's interesting to me that the airlines had a nice day today. There are times certainly when companies react positively to job cut announcements, as cynical as that might sound, but if they're lowering their cost base to remain profitable or just stay alive, in the airlines case, some investors are going to cheer that. Any bet on the employment numbers next week? Well, the consensus is for job gains on Friday to be plus 1.2 to 1.4 million. I don't have a personal opinion on it yet. I'm going to do some work on it, maybe over the weekend and Monday and Tuesday. Maybe on Monday or Tuesday, I'll, take a shot at it. I was off last week on it. I think I threw a number out there of maybe plus 650. It came in at 3 times that. The ADP report will come out on Wednesday. Sometimes that's a very good indicator of what the jobs report is going to be on Friday, 2 days later. Last month, it was not. It came in at plus 167,000. The jobs number for July that came out 2 days later came in at plus 1.8 million. That being said, everybody will clearly take a very close look at the ADP numbers on Wednesday. So I don't know, I don't know that we had big layoffs or big hirings during the second week in August. I mentioned the second week in August because that was the survey week for what the jobs report that we will get next Friday. Um, we had some businesses calling workers back, and maybe we had a few businesses letting some workers go in states where there were some shutdowns. I did read that um, a week ago or Thursday when we got the weekly claims number. In that number, they had mentioned for the week before that the largest amount of weekly claims for the prior week came from New York and New Jersey. Clearly, New York City, as de Blasio has been totally lame and in complete obstructionist mode of letting businesses reopen in New York City. The riots and all the destruction that we saw there after some of the protesting certainly didn't help either. And in New Jersey, look, Murphy has kind of been following what Cuomo's doing by, anywhere from 3 to 5 days to a week. I believe that Cuomo said a week ago or very, very early this week that gyms could start to reopen. Murphy said yesterday that gyms can start to reopen next Tuesday in New Jersey with, I don't know if he also said 30% capacity constraints or not, but he's just, he's been pretty lost throughout this whole process. He's been really just following Cuomo's lead pretty much every step of the way. So look, next, the only other thing to mention is that after the close today, you had the effective stock splits of 4-for-1 for Apple Computer. So it's now about a let's see, $125 stock, down from a $500 stock. And then you had a 5-for-1 stock split for Tesla, which I think went out 2,100, 2,200. So Tesla Monday morning will be a, let's call it a $415, $420 stock. You also have 3 companies going into the Dow that will be effective for trading Monday. And you have 3 companies going out of the Dow Jones average that will be effective for trading Monday also. So we will see if that causes any additional little fireworks in the market, what people say about it over the weekend, and what the new divisor will be for the Dow Jones Industrials. Michigan hasn't announced gyms yet. We are copying. Yeah, big fish. Yeah. I got to think that announcement will come very shortly. I mean, she's been kind of lost also. And, if New York, now de Blasio has not said gyms can open yet, I believe, in New York City, but Cuomo has said they can open in New York State. So whether we have a big ultimate showdown between Cuomo and de Blasio in New York City, we'll just have to see. We'll see how much blowback de Blasio gets. I think a lot of people in New York are probably still out of town until Labor Day. That's next Friday. So it'll really be that second week in September when I think the heat will really turn up on de Blasio to allow indoor dining. Although he said it might not be, he might not allow it till the beginning of next year. Yeah, they want to crash the economy. Jen, I'm not going to disagree with you, but I just think that the pressure on them is going to be unbearable if the states that are reopening at a much faster pace can avoid mass outbreaks of the virus and spikes in hospitalizations. Jen, I would agree with that 100%. That if the restaurants aren't allowed to reopen in New York City until January 2021, well over 50% of them will close um, indefinitely. So that's not a good sign. It's going to just get more people to leave New York for suburban life or even beyond. Um, and a lot of that will, of course, be whether or not they feel they can work effectively and productively and profitably without going into an office in New York City. Not till next year. Way. Look, I certainly appreciate everyone's support. It's 9:50 on a Friday night. I think we're going to wrap it up here. This is the Anderson Report. This is my YouTube channel. Please subscribe if you haven't already. You can hit the little bell to get notifications of when the next broadcast will be. Um, Pass it around to friends of yours. Um, on Periscope, I'm TJ Anderson 12. On YouTube, TJ Anderson 1. Everyone, have a great weekend. There might not be a show on Monday. Um, Most likely on Tuesday. Definitely on Wednesday through the end of the week. Thank you, Big Fish. Thank you, Jen, Newsreader, everyone else is in the chat. Mark, have a great weekend, everyone. And I will let everyone know when the next show is. I'm going to try to do a show Monday and Tuesday. It might be from a different location, but I got to take some of my stuff there. So I'll update you. Updates to come. Have a great weekend, everyone.